Oil prices were largely unchanged in Asian morning trade as investors weigh optimism demand forecast from the OPEC Plus producers group against mixed economic data in top importer China. Brent crude declined by 4 cents to sell at $86.36 a barrel, while U.S. West Texas intermediate crude futures were down 2 cents to sell at $82.80 per barrel. Both benchmarks have been on a sustained rally since June, with West Texas intermediate crude traded on Thursday at its highest this year and Brent hitting its best price since January. Meanwhile, the Organization of Petroleum Exporting Countries on Thursday says it expects world oil demand to rise by 2.5 million barrels per day in 2024 compared with a growth of 2.44 million barrels per day in 2023. Both forecasts were unchanged from last month. Market sentiment was also lifted by Thursday U.S. consumer prices data for July, which fueled speculation the Federal Reserve is nearing the end of its aggressive rate hike cycle. And finally, Asian stock hit a 1-month low and logged a weekly loss today, while the dollar headed for a month of gains after U.S. inflation came in steady without surprise on the low side. Soft demand at a 30-year Treasury auction and a blowout in the U.S. budget deficit also weighed on bonds, and the higher yields in turn lent the dollar at a leg up, particularly against a yuan pinned by yield control in Japan. U.S. stock futures were flat and European futures fell 0.5%. MSCI Broadest Index of Asia Pacific shares outside Japan also fell 0.7%, with stocks in Hong Kong and China the biggest drag, recording a decline of 1.6% for the week. Headline US CPI was 0.2% last month, the same as a month earlier, and details were encouraging, with core goods inflation slowing down and only rent provoking stubbornly sticking.